welcome to another quarterly podcast on emerging markets by Matthew Strauss. Emerging market assets went through a challenging period during the third quarter of 2021 as two of the key risks highlighted earlier in the year materialized. The 1-2 punch from higher US rates and increased Chinese regulatory intervention saw EM equities losing 6% during the quarter. On the positive side, the vaccination gap between emerging market economies and their developed market peers are closing, and several emerging market countries are now expected to reach high levels of vaccination by the end of the year. During the quarter on performance, the EM fund outperformed its benchmark, favoring non-Chinese e-commerce stocks like Mercado Libre and Delivery Hero really helped during the quarter. Interestingly, despite the increased risk in China still delivered some really good returns on specific companies. The Chinese power producer Huaneng Power and the blue chip aluminum producer Chalco took top honors during the quarter. But as a reminder that a flood of Chinese regulations had left many investors worried about how far Beijing will take the regulatory clampdown, a number of Chinese stocks also occupied the bottom of the attribution list. The performance of EM equities into year-end and into the first part of 2022 will depend on a number of factors. 1, the direction of US yields and the US dollar and inflation with that. 2, Chinese policies and regulations. 3, global risk sentiment. 4, continued vaccine rollout and possible COVID variants. 5, the profitability of companies. And 6, the pace of withdrawal of fiscal and monetary policy stimulus in 2022. Our quick take are we are concerned about factors 1 and 2, positive on factors 4 and 5, and see the glass half full for factors 3 and 6. Thank you for listening to this podcast.